We are talking with prominent leaders of the community, the Black business community, and talking about what they are doing, how we can do it better, meaningful conversations, and actionable items. I really feel like that's a big takeaway for me.
Yeah, we've got a couple of those leaders with us right now. Nicole Elam is president and CEO of the National Bankers Association. This is the trade association that represents MDIs, also known as minority depository institutions. They're defined as any depository institutions like banks or credit unions that are owned or operated by African Americans, Asian Americans, Hispanic Americans, or Native Americans. And one of those institutions, Carol, is Liberty Bank and Trust.
Right. They were chartered in New Orleans back in 1972. They have locations in Mississippi, Kansas City, Michigan, Illinois, Alabama, Kentucky, Tennessee, and more. They have grown. They are one of the largest Black-owned banks in the United States. So we are pleased to have with us as well Todd McDonald, president of Liberty Bank. Todd and Nicole, welcome. And we should say thank you for having us as part of this conversation. And, you know, we talk about things have been talked about for a long time. And it does sound like we're hearing about actions finally being taken. Talk to us, though, about the MDIs in particular. We talk about underserved, unserved banking community. The role of MDIs, how important they are.
So minority banks have been around for over a century, serving communities that have been underserved by mainstream financial institutions. The unfortunate story is that they were born out of racism because Black, brown, and immigrant communities couldn't go to mainstream financial institutions for their banking services. But today they're just as important. They're serving communities that are 77% minority, that are 2 times more likely to be denied for a small business loan, even if they have the same credit profile as their white counterparts, and communities that are 2 to 3 times more likely to be unbanked and underbanked. So they are still just as important today, data shows, as they were over a century ago when they first started.
Todd, does that sound like the segments that you know, your bank has a wide reach now, especially, you know, in the last few years as you've grown and acquired other banks.
Yes.
But does that sound like the communities you serve?
Absolutely. In terms of the communities that we serve, typically they have lower credit scores. They don't have as much net worth or wealth to come to a bank with. And so over 50 years, Liberty Bank has been very successful in lending to those communities that are underserved and overlooked. And I think the strong part about MDIs is that we've been doing this for a very long time, and we know what we're doing, and typically our delinquency rates are within our peer group. So it shows that we have a tremendous understanding of underwriting within our communities. And so the more support that we have, the more impact we can pass on.
The perception is, right, that that's not the case. If you go back to traditional banking, right, or many of the bigger banks, like there's that perception that, okay, that person is not going to be a reliable customer. They're either going to have trouble maintaining a loan or whatever. But it's interesting to hear those statistics. Why aren't they more well known?
Well, we have limited marketing budgets, so we can start there. And, you know, we have not done a really good job at telling our stories just because we're limited to what platforms we are part of. Thank you all for having us on this show, because obviously this is going to help us hopefully get some more supporters. But in terms of our bank performance, it's there. And there are about 150 MDIs amongst the roughly 4,000 plus banks across the country. So we're there, and we're here to stay, and we're hopefully here to grow.
Nicole,
Go ahead.
Yeah,
you want to jump in?
I would also say that we need to start redefining what we think of as risk. Oftentimes, Black and brown borrowers are considered riskier, and that's not the case. That's not what data shows. When you look at the data, what allows us to say yes when others say no is because we're looking at data points outside of credit scores. We're looking at the fact that you're consistent with your rent payments, your utility payments.
Stop
that
right there for a
that you're
second.
Consistent.
Rent is very important because there's not a lot of necessarily home ownership because of
history of
wealth.
redlining and all kind of things.
So rent can become a really important metric.
But it's not when you're looking at underwriting at scale. That typically happens at larger institutions. They're underwriting at scale. But what we are great at is relationship banking. Because I know you, I'm looking at other factors, other data points. I understand that there's a history of redlining in this community. So you may not own a home, but guess what? You're consistent with your rent payments.
Shameless plug. We've done close to over $1 billion.
We love shameless plugs.
We've done close to over $1 billion in mortgage lending in the communities that we serve over the last 8 years. So when you look at access to capital, putting the money out and getting it back, we're experts in this field.
I want you both to answer this next question. Nicole, I want to start with you. This has been a tough year for regional banks. given the regional banking crisis we experienced in the early part of this year. What have you heard from your members? How tough has it been on your members? And Todd, just talk to us a little bit, about the health of your bank in the wake of, rates going up.
So I will talk about the last 3 years and this post-pandemic, post-George Floyd environment. You've seen explosive growth of minority banks. They've grown by 38% in asset size, and black banks have experienced the most growth, growing by 62% in asset size. So a lot of growth that is happening, unprecedented growth. So obviously when the bank failures came, there was a concern about deposit flight. There was some deposit flight. I would be lying if I said it didn't exist. It did happen, but it has since stabilized. And so I think you had the strong context of what was happening, of the explosive growth of people talking about and investing in minority banks, billions of dollars from the federal government. Wells Fargo invested $50 million into 13 black banks. And so there's been a lot of growth, and I think that helped set the environment of when that crisis happened, they were well positioned.
And we were one of the recipients of the investment from Wells Fargo, and they've been a strong partner with us. And so while we have had a small number of deposits to run off, a lot of our customers are mission aligned with us. They understand what we do, how we do it, and when they are supporting that, it only allows us to do much more bigger things in our country. In terms of market rates, interest rates, we are not the big gorillas that are offering the top tier rates. We have about a 1.5% to 2% below sort of that ceiling, and a lot of our clients are very pleased with that.
How do you do that?
Well, one, going back to relationships,
Okay.
making sure that supporters of us know exactly how we're deploying funds and the impact that we have on the communities. And so when we show our scorecards, a lot of people are impressed.
Yeah.
Are you showing, though, any signs of stress in this environment? I mean, part of the reason I'm asking is I feel like we're in this environment from day to day. The sentiment can change depending on the data statistics.
It's high interest rate environment. The borrowing costs are high for
So how would you? Let me start with you first, Todd. Like, what? Any signs of stress among your depositors or your consumers, your clientele?
Not that we see right now on the deposit side. On the credit card side, we are starting to see a tick up. But typically...
Defaults or just higher balances or?
Both.
Okay.
Late payments?
Yes.
Okay.
But not to the point where it's causing any concern. Typically, African American communities and black and brown communities, we have a lag that takes place when recessions take place or when downturns take place. It doesn't necessarily hit our communities dead on. There might be a 1 to 3 year lag until we start to see the real effects of that. And then after that time passes, sometimes we gain support or we have another turn in the economy that helps us to offset, a truly bad delinquency rate.
Nicole, how would you describe it from your members?
Yeah, I would certainly say the same thing. I think the good news is that we live in a society that is extremely more values driven. When you think about the largest share of the U.S. population, it's millennials, and they are more values driven than any other segment of the population. So the fact that you have people who are here to stay, folks that my grandparents banked with these banks, they've got long-standing relationships, that's phenomenal. But then when you look at the other side, you can't say that the interest rates aren't impacting communities. The good news is where
so some stress.
Yeah, there is some stress, right? Borrowing costs are high. Credit cards, people typically rely on credit cards when the cost of borrowing gets high. But we've been here, and we're going to continue to stay by our communities, and we're not concerned.
Todd, you've been very acquisitive over the last few years in terms of buying other banks in other states. How do you keep customers loyal if you're buying the bank, changing the bank's name?
Sure. So in terms of the loyalty that comes with a lot of the institutions that we purchase, it's there. Just like Nicole mentioned, their grandparents banked at that bank. So let's just call it Tuskegee Bank out of Tuskegee, Alabama. Lots of history there.
Yeah.
And when you look at the MDI space, most of the banks were founded by leaders in those communities for decades. And so when you have that connectivity, it tends to stick.
Cool.
MDIs. If you could do change one thing, Nicole, to just help that community, what would it be?
Partnerships. I think you get further faster together, and right now technology is completely changing the landscape, but minority banks are small banks. They don't have what they need in order to compete in this technology game. So partnerships would be the one thing.
With big guys.
With the big guys. With corporate America, government, anybody and everybody, partnerships.
Todd, your thoughts on that?
So Wells Fargo has this really creative money market product called the Empower Share Class. And that is truly beneficial to MDIs in our space. So we could take on billions of dollars under this platform, and it does not require any capital from the MDI. But the fees and the services through Empower Share Class are phenomenal. We've been a part of it for several years, and Wells Fargo has been an excellent partner. So we hope to expand that for the near future and in years to come.
All right, that's a great way to end. Hey, listen, guys, thank you so much.